Good afternoon, everyone. Welcome again to a webinar brought to you by the FinTech Association of Hong Kong and Clifford Chance. We are going to talk about virtual banks, the continuous journey, a very exciting journey, but also filled with challenges as well as opportunities. And we are very pleased today to have again a fairly diverse panel made up of CEOs and senior executives of virtual banks, as well as Clifford Chance representatives to help walk us through some of the regulatory landscape, as well as our own chairman, Benjamin Quinlan. So with us today, I'm Helene Li, I'm the General Manager of the FinTech Association of Hong Kong, but we also have Rockson Hsu, who is the CEO of CA, Rockson Hsu, who is a partner at Clifford Chance, Edwin Hui, who is the Head of Corporate Affairs at Mox Bank, and our own Benjamin Quinlan, Chairman of the FinTech Association of Hong Kong. So let's just kick right into the crux of the matter, what we are here to talk about, that journey of the evolving journey of the virtual banks. So, you guys have now all been in operation for about over a year or just, 6 to 8 months at least. So what has been, the journey been like, and what are some of the challenges, and how have you been dealing with that?
I'll start off. Yes, hi. I think for CA Bank, hi everyone. CA Bank has been in operation for 16 months now. Time flies, and our initial product suite was in retail, loans, deposits, and payment. And I think for the past 16 months, we've launched also card. We kind of changed the payment behavior from credit card to debit card. So we issue a CA card along with Power Draw, which is taking up the advantages of credit card, being a debit card plus a OD plus rewards. So we kind of take those two components and make it to be a more user-friendly, more fun kind of experience. And then we also expanded into corporate banking because one of the 3 policy objectives is financial inclusion. So our main target client besides retail is SME. So we launched corporate banking in March. So just about at our anniversary with the corporate banking, same product suite, loan, deposits, and also payment, because we don't believe simply offering the liability side can make us sustained. And then I think the other interesting breakthrough is we also launched bank assurance, and being the first bank to partner with a virtual insurer to offer life insurance and also heart attacks and cancer coverage. So that's where we've been so far.
As for Mox side, we launched September 2020, so we haven't turned 1 yet. Kind of about nine months old. We started with smart savings, smart banking, and a smart spending proposition. Kicked off the debit card. The focus this year was really on launching the credit card, as well as introducing really what I'd call kind of micro innovations to a lot of services that people in Hong Kong are used to. So for example, we launched a flip function, which would enable you to easily spend between debit or credit as you choose. We've also launched some lifestyle features, one called HKT Auto Pay Switch, which we've integrated with our partners to enable people to move their auto pay payments. And then earlier this week, we launched split purchase as well, which is effectively installment loans, but the tweak there was really around making it more instant. So rather than a transaction having to settled before you can do such installment transactions, you can do it kind of immediately. And then obviously the other programs we've done include bill payments, MGM. So in many ways, we're almost kind of building the foundations of what people are accustomed to in their banks, and just hopefully creating these little innovations to offer to customers.
Great. I was just wondering at this point, because that has been like an evolving journey, and I know that both Ben and Rocky have taken a look at other virtual banks and in other regions. I was just wondering, are there any similarities or differences, or any specific insights to be drawn? Maybe Rocky first.
Yep, thanks. Yeah, I think drawing from the experience from kind of the Europe side of things, I think for where we see the key differences in terms of the products and services they are offering. I think the Hong Kong side is still relatively young in terms of the virtual bank ecosystem. And the services and products are still developing. But from the Europe side, we see it's across a full range of product services, whether it's just banking products, securities, insurance, even cryptocurrencies, or the derivatives as well. And we see them kind of having regional or global expansion as well, quite a few of them. So I think the Euro side of things in terms of the products and geographic is definitely kind of the key difference comparing to Hong Kong. But I'm sure Hong Kong, it's going that way, and we will get there, and look forward to see the head-to-head of the virtual banks in that landscape.
Cool. Thanks, Rocky. Ben, we did that report, launched slightly earlier this year. Would you care to just maybe extract a couple of insights from there that might, add color to this?
Sorry. Sure. We released the report in March, but there have obviously been quite a lot of updates in the VB ecosystem. I mean, a month in VB land is like a year in any other part of the world. But key things to note. So really good traction overall among all of the VBs in terms of customer acquisition. The last data point we estimated was as of the end of March 2021, this year, probably just shy of 600,000 customers in aggregate. So we estimated around 580,000. ZA was at the top of the pack with over 300,000 of those customers. The initial launches were around savings and payments, but now I think the bank's given that customer base, and I think the total deposit size of around 20 billion at that point, with the average customer deposit across all of the VBs of around 35,000 Hong Kong dollars. That was our estimate. So, a good base of deposits to start a lending business, which is why you've seen many of them now address that part of the value proposition. And I think, early indications, of course, is very early days, but we noticed some nuances between the banks. There's obviously the VBs that have focused more exclusively on the SME side of the market, such as PAO Bank and then Ant Bank. Within the retail space, like you've kind of got your Libby's and your WeLab banks, which seem to be a bit more mass market focused. ZA and Fusion, in our view, seem to be what I would call the middle of the pack, escalating into the core affluent. And then the Moxes seem to be more of the aspirational affluent. Now, maybe the CEOs and executives on this call have a different view, but you can infer quite a bit, especially through the merchant partnerships and ecosystems that they're building around them. And then even on what we would say the SME side, there's some differentiation, particularly around client targeting. You've got ZA, for example, who we see focusing a bit more on FinTech SMEs. You've got your PAOBs, which is really on the trade link SMEs, and then Ant Bank, which is really focusing its proposition around the e-commerce play. So again, different strategies, very early stages, but I think it will be very interesting to see how all of this plays out in coming years as to which approach works and then which approach will lead versus which one will lag. But yeah, fascinating.
Absolutely. And I think those are just some of the highlights of the multifaceted, opportunities, but as well as challenges that, all the virtual banks face here. I'd like to turn for a moment to the regulatory environment. Rocky, are there specific key points maybe you can share with us that help, the growth phase of the virtual banks? Maybe you share a few points with us first before we turn to Roxon and to Edwin. And I do encourage everyone to raise questions. Once you raise your questions, we should be able to see it and we'll address it. Let's keep this as interactive as possible. Over to you, Rocky.
Sure. Thanks. Yeah, I think in terms of expansion for virtual banks, definitely there's quite a lot of regulatory and also legal kind of considerations to get through. In particular, launching new product and services. Now, I mentioned before. Now, there are other banks, virtual banks outside Hong Kong that are offering a wider range of service products. Now, in Hong Kong, the starting position is now. All virtual banks were born with a relatively simple business model, simple banking products. That's about it. Later on, then you add on payments, you have credit cards, etc. Now insurance, for example. Now we expect the natural progression will go to securities, in particular. Starting to involve investment products and also geographic expansion. So not only focus on Hong Kong residents, but you may also onboard overseas clients and expand elsewhere. Now, naturally, the regulatory landscape in Hong Kong, now we have a perfectly fine regulatory regime covering securities, insurance, etc., and how you expand overseas. Existing banks, traditional banks are doing it already. So there's no reason why virtual banks cannot expand. So the regulatory regime is there. It's more about giving the regulators confidence that virtual banks are ready now, because I think at the initial stage, it's more to get the virtual banks up and running and make sure the system are all in place and give them everybody confidence and controls are all good, and then you expand further. So I think it's a very good timing to start planning to go into more products, in particular securities, which will be I would trust and would be like to see views from Rockson and Edwin as well in terms of the opportunities on the security side could bring to virtual banks and how it interacts, because internet banking, online brokers, they are all expanding in Hong Kong and in particular gathering overseas clients as well. Now, on the regulatory consideration, obviously, the security side of things, you bring in a whole new securities regime comparing to only the HMA side of things. You need to set up all the licensing consideration, outsourcing, you got data, cybersecurity. Security side, you have different KYC requirements, you have suitability, you have other risk disclosures. So those are all kind of legal regulatory consideration to think about. But again, it's not something that cannot be done. I mean, a lot of the online brokers and banks are doing it already. So it's more about getting ready and to seize the opportunity, so to speak. Given in particular, I'm sure everyone's aware the GBA Wealth Connect is coming, and in particular, there's a strong focus on how technology could help in terms of the cross-border kind of market development between the southern side of mainland and Hong Kong as well, in terms of and onboarding of clients and having that infrastructure set up as well. So I think that is also another opportunity, great opportunity for virtual banks as well, when security side of things is opened up for them to expand the business.
Yeah, thank you, Rocky. I think that's very interesting and leads to the question for Rockson, as well as Edwin. You know, is that like a sweet spot for your growth journey, and how would that play in your context? Maybe Rockson first.
I think I'd like to supplement to the earlier topic of differences in terms of the jurisdiction and regulations. I think one of the key differences that we see in Hong Kong is we started off digital banking or challenger bank as a licensed bank. I think that's a big difference between Hong Kong versus the other governing laws. The good benefit of that is I think the major challenge for us as a startup bank is to gain trust of our users and customer. And I think being a licensed bank in Hong Kong under the deposit protection scheme, that helps very materially. Because if you look at the growth, at least for CA Bank, I mean, within a year, we have 300,000 users. When we look at our other counterparts back in Europe, like for instance, Monzo started in 2015. I think in the first 2 years, they have 250,000 users. And if you look at that, the population base is so much different. Hong Kong, with 300,000, is already 4% of the population. With 250,000 users in 2 years, for UK, that's only 0.4% of the population. So that shows that the path that our regulator took is actually a very successful way to build up a bank very quickly. And if you look at also N26, which is the Germany counterpart, similar pattern. I mean, they have, I think, around 300,000 users in the first 2 years. And that's only make up less than 0.5% of the German population. So that's one key difference is that we see in the supervisory framework. And speed is one thing that is taking everybody by surprise, and that's driven by FinTech. We announced our year-end number 2020 at 220,000 users. At our anniversary, first quarter 2021, we're 300,000. So that's like within the quarter, we grow by more than 1/3. And that speed is not just a one-off. You know, we're keeping that pace more or less the same way. So I mean, the challenge is to build the trust and also have the market adopt to technology whereby things moves really, really fast. I think the latest record we have for account opening is 2 minutes versus what we promoted a year plus ago in 5 minutes. And that's one thing that helps and boosts our own morale a lot, because it's really up to the users and how we educate the market to fully utilize the benefit of FinTech. I mean, 5 minutes was an average because it took I think my fastest one was like 3 minutes. But then for 2 minutes for a real user to come up with an end-to-end operational account, that's very, very encouraging. I think challenge I would like to also raise a bit on challenge. Building trust is difficult because I mean you're placing money with me, so you're taking my credit risk, and I'm a new startup, so that's the tough part to do. Deposit protection scheme helps, but then it also rides on how we build our product and how we execute our vision. I think for all of us, the 8 of us, I mean, we all have similar policy objectives, but then it's the delivery that we offered, and I think each of us have our own niche, given different shareholder background and different partnership initiatives. So I think the outlook is very positive, and I think to that point on GBA, which I think we're observing, but then the Wealth Connect that Rocky mentioned, the primary requirement would be on SFC type 1. So we are already engaging SFC for the relevant licenses, but that probably won't come that fast. Of course, the word fast is differently defined, but hopefully fast enough we'll catch up for this year. And pass it on to Edwin.
Well, I was more going to build on what Roxanne and Rocky alluded to. In terms of the differences, at least when we did our work in the analysis, a big piece is honestly, I think Hong Kong went for, in some ways, quite a bold experiment, awarding 8 licenses, and all very strong players. So ZA, but also obviously the Alibabas, the Tencents, the Ping Ans, if you think about 2-note issuing bank and a local unicorn. So if you're compared to the European markets, there were true startups. And that evolutionary path was a little bit different, which kind of brings back to one of the point Roxanne highlighted, because if you look at back to that section 16.10 of the banking ordinance, all VBs have to meet the same prudential or regulatory requirements as any AIs in Hong Kong. That's quite different from what Europe tried, because a lot of the fintechs in Europe, or even a lot of the Monzos, be it in US, Europe, or even to an extent China, they started more as payment companies rather than a fully licensed bank. And so that's why in some ways, I do think the trade-off would be, I think for the virtual banks in Hong Kong, you'd see a lot of competition given the 8 licenses, but probably more of a healthy, balanced portfolio, I would assume. But the technological speed or that innovation could be something that you trade off versus what other markets have tried. What would be kind of one way that I think about this. And then on Rocky's point around obviously the competition around wealth, or around obviously the Stock Connect, I think it does go back to why there was genuinely so much interest in these virtual banking licenses. So a lot of people applied for them all the way back in mid-2018. I still remember when we submitted the license. Well, for us, it was 28th of August, but I think everyone submitted around August 2018. And I think it goes back to Hong Kong as a retail banking market having very deep revenue and profit pools, and the attractiveness of that, be it across the wealth management space, be it across even the lending space or the deposit space, or and I think that's certainly the opportunity that I think a lot of the virtual banks will be looking forward to and pursuing.
Absolutely, and I think both you and Rockson speak about, the building trust, which is of course, challenging, but also you need to balance that with the speed and the agility, to expand and to take it to market. So it's a tall order indeed. Ben, any further thoughts to add on top of that?
Yeah, I mean, I kind of break down the regulatory points into 3 buckets. So firstly is the geographical overlay, which is in particular the GBA opportunity. At present, for those of you who are unaware, virtual banks are limited to serving Hong Kong permanent residents only at this point. So they can't actually service offshore customers. I think Wealth Connect is going to be the catalyst for opening the door. So having the discussions around how cross-border can be initiated. But notwithstanding that, I think quite a few things need to be clarified over regulatory harmonization between Hong Kong and mainland China as distinct jurisdictions, and ultimately what that means for the service proposition and which regulatory body has oversight for any complaints or issues associated with servicing customers who are tied to a VB. The securities license space is obviously the one that opens up when it comes to wealth management and trading. It's a very natural move, in my view, for the virtual banks to explore this. The reality is the deposit base in Hong Kong, average per customer, is pretty high. It's not too bad for a starting point. Even if you look at the traditional banks, like HSBC's average deposit per customer is just shy of $500,000 Hong Kong dollars, which is a pretty sizable number. And the VBs have been showing some pretty good traction in that regard. But in my view, a depositor is not the person that needs lending, right? And a deposit at the end of the day is a liability on your balance sheet. So the idea is, well, how do you create a mechanism by which to transfer some of that expense into an actual income generating stream? So it's a very logical thing. But again, that opens up especially type 1, type 4 securities license discussions in Hong Kong. The other one is really, and this is the curious one because it's more around like the digital assets ecosystem. I know Rocky mentioned, for example, in light of Revolut, they're pretty big on the crypto side of things. Obviously, the new regulations are passing in Hong Kong regarding the prohibition of retail investors in this space. And given that, I guess the core customer base, particularly in the retail side, are not necessarily PIs with the virtual banks. There will be some who are. It does call into question, well, what does this mean if we want to enter this particular aspect of the market? But overall, look, it all depends on that product and service rollout. But again, those are the 3 core themes that I would see as the next kind of regulatory challenges or hurdles that all of the VBs need to pay close attention to. Just an interesting aside, sorry, I want to mention Livy's launch of Buy Now, Pay Later. So I call this out because, typical credit products like cards and personal loans, all very interesting. BNPL is a brand new concept in Hong Kong. You have the likes of Hula, Atomi, and now Livy entering this space. And for those of you who don't know how the BNPL model works, the consumer doesn't pay interest. They pay installment plans, usually over a 3-month period, and the merchant is charged a fee in the form of a merchant discount rate. I'm curious to see how this is going to evolve, given Hong Kong has one of the highest credit card penetration rates in the world, as well as one of the lowest delinquency rates in the world. Will there be appetite for this product and a shift in consumer mindsets, particularly from the lower income segments, to move away from what is very easy, cheap, available credit in Hong Kong to a different payment model going forward?
I think everybody is trying to look for differentiators, and I think, as they go along, so whether it's BNPL or other forms of service offering, everybody is trying to carve a certain position for them in this journey. And there's actually one interesting question from the audience. Are there additional regulatory approvals required when launching new products? Maybe Rocky, you'd like to take that one? And please, everybody, do keep the questions coming in case it's rare we get everybody like this, on the same platform. So if there's something on your mind, please don't hesitate to raise this. Rocky, would you like to take that?
Yeah, sure. I mean, now it all depends on the product. Now, let's say if you want to launch a new product in security, so as we mentioned before, then the securities regime comes into play. So for virtual banks, it will be a registration. Getting technical, they will be getting a registration with the SFC. So depending on whether you're selling it, then it's a type 1, type 4, or management, it will be a type 9 license. So definitely new products, you need to think about regulatory licensing approval requirements.
Yeah, I'll supplement to Rocky. Basically, for a new bank like the 8 of us as virtual bank, the requirement is any new service and products that you're launching are considered a new product. So even though it could be a traditional lending, if it's on the corporate side, I mean, when we launch each of the product I mentioned earlier, we do seek regulators' approval, even though it's a traditional banking product. So that's a requirement that we all go through with all the internal assessment and making sure upon launch, everything is bulletproof. So we do need MA's approval as well as SFC if you're doing wealth, and also IAs if we're doing insurance products.
Anything to add, Edwin and Ben?
Well, the only point I was going to add is I think the support of the regulators through the Sandbox environment. So at least the various product launches that we've seen. So certainly the regulatory front. On Rocky's point, it depends a little bit on the products in terms of the additional licensing front. So not all products, I'd say, would require additional new licenses, but certainly the engagement with the regulators, the thoroughness through that Sandbox kind of phase, and then the rollout of the products. I mean, ultimately, I think this is as much the regulator and the bank's reputation that we usually want to protect.
Absolutely. Now, there are a few burning questions from the audience. So let me just, turn to those first before, we have our the questions that we like to explore. The first one is, concerning the geographic, coverage. I think Rocky alluded to that slightly earlier. Will virtual banks target clients other than those from Greater China region? Are there, huge overseas opportunities? Maybe, other regions in the APAC that you are looking to to target. Edwin, Rockson.
Let Edwin go first.
Yes.
Sure. More from Standard Chartered's perspective. So obviously Standard Chartered is present in 30 retail banking markets. I think one of the challenge with any retail banks they'll find is the traditional model really requires scale. So I think if you were to look at most international banks, be it the kind of Big Red Bank or Standard Chartered or any of the banks, the 20/80 rule definitely applies. So some market drives a much higher or larger proportion of the revenue or profit of the retail banking segment. And one of the areas they always wanted to explore was really the digital challenger model. Like, can you scale digitally in a new market, leveraging on the banking licenses that you have in those markets? So what Standard Chartered's publicly commented on would be Singapore. So that's an area they're actively working on. And it really goes back to kind of almost the core of how Mox or why Mox was set up, and why even in Hong Kong, because a lot of times we do get that question on, Standard Chartered already has a license. Not every licensed bank went for another virtual banking license. And it was very much that thesis or feeling at the top that if we don't cannibalize ourselves, somebody else will, like BA, kind of Rockson and ZA Bank. So it was really much that ethos of, both to defend against potential disruptors, as well as, potentially could we grow market shares, and we learn from the biggest market. Because again, I think it goes back a little bit to in Hong Kong, when you build your kind of business case, the revenue and profit model probably supports a different level of investments to other markets, say a smaller market or just a different kind of model. And then that lessons learned can then be reapplied to, potentially other challenger banks across the group, or even kind of within Standard Chartered itself. So when we build new partnerships with a lot of our tech partners, is there something that can be learned by the parent?
Yeah, I think that's absolutely true. You know, I know there are quite a few hot questions coming in, and they're very interesting questions. But let me just turn for a moment to, you know, like digital, you know, that whole digitalization process, you know, from SaaS to what we call BaaS, banking as a service. You know, what underpins that banking as a service are obviously, you know, there are lots of issues to address, cybersecurity and many of these other adoption issues, compliance, and so on. So can I just gather the thoughts from each and every one on some of those banking as a service, you know, cloud solutions? Maybe we start with Rocky.
Yep, thanks. Yeah, I mean, for in that area, from a regulatory perspective, I think the top of the list we often get asked is on the data side. Now it's about storage, ownership, protection. It's always up on top. Now, even between parties, the service provider, the banks, there's always the question: who is providing whom with what data? Some will say, I only receive data, I don't provide data to the other side. Some will say, this is, well, we got the individual's data ourselves. So it's not you that provided to us, so we don't need to comply with your personal data requirements. So there's all sort of different kind of consideration in between. Now we obviously as legal advisor, we go in and help them to actually sort out actually what happens and what sort of data is collected and provided. And it's interesting to see different arrangements and collaborations may yield very different scenarios, which then pops up different requirements. And then just on the MA side, the usual stuff about outsourcing data requirements, where do you store the data, if the data center is outside Hong Kong, legal opinions, advice needed, and all sorts of personal data consideration, because from a bank secrecy perspective, the MA is in particular sensitive when bank client data transfer is involved, particularly when it involves overseas transfer. So those will be quite kind of often issues we need to think about. That's top of the list from our end.
Thank you so much, Rocky. I think you highlighted quite a few important points. May I just turn to Edwin to, you know, what is that, you know, tug of war between the speed as well as, you know, the compliance side of things?
Yeah, I have to first confess, compliance is not my area of expertise. So my domain is really more on the partnership strategy and the corporate affairs side. But if I was to look, and this is more of a personal view, so I hope I don't get in trouble, but I do think the current regulation in Hong Kong is a little bit more set up for established banks, because I've worked at Standard Chartered for a long time as well. So in terms of, again, it goes back to even the banking ordinance for VBs having to meet all the requirements for any AIs. So that's why it goes back to your question of banking as a service. And I'm not sure if on that regulatory front, we've adapted them enough for such business model. In terms of the agility, the nimbleness, the leanness, I'm just not sure. Because in some ways, it goes back even to the leanness. So say a compliance function, in order to satisfy the bar, which is set quite high in Hong Kong, you would certainly need all of those resources, whether it's on the people front or the expertise front, etc. That's why I have that balance. Even when I first saw the questions, when you start thinking about BaaS or SaaS, like would Hong Kong be really ready to go into that? And I think in some ways, be it traditional banks or now the virtual banks, it'll probably be a bit more time, would be my humble 2 cents.
Yeah, I think that's a very valid point as well, Edwin. Roxanne, perhaps you would like to enlighten us with some of your thoughts on this?
Yeah, I think on the banking as a service is basically predicated on the open API platform, and I think to Edwin's comment, I do think MA has been pretty ready, because I mean the whole virtual bank idea actually pops up as one of the smart banking initiatives by MA back in 2017. And I think the Open API kind of launched in 2018. So I think we are catching up quite smartly. And if you look at the latest MA's initiative on FinTech 2025, I think virtual bank, I would have to say, kudos to us. We've presented a viable case whereby the first focus is all bank or FinTech. So I think that's a very good direction, and putting away all the question whether FinTech can survive or whether virtual bank can survive and cannibalize traditional bank. Nope, we're all going to go FinTech. I think that's a very strong statement. And from the regulatory side, MA has been covering us both from a business development angle with all the Sandbox that I think when the question pops up. Sandbox traditionally has been focusing on a product or feature kind of pilot environment. But I think virtual banks kind of bring it to the next level whereby we put the whole bank into a sandbox. So that's what we did back in December 2019. And then the second thing is on security. I think cybersecurity is one key challenge to all of us. And I think under the cybersecurity fortification initiative, that helps all the banks, not simply virtual bank and traditional bank. We all have the same standard to make sure that we're offering a banking service very fast, promptly, simply, and also safely. So I think the overall direction of the Hong Kong banking industry is very positive, and it's up to us as virtual bank to spearhead the whole mindset of using FinTech to make life a better place. I think one of the questions that what are we looking for? We're looking for people who are traditional bankers, who are passionate to drive things very differently. I mean, a lot of things that we launched in CA Bank are not really tech level. We're not rocket scientists, but then we would change the process such that it's compliant with SPMs, the MA's rules and regulations. But then we make our users' life much quicker. Like I think opening an account, we didn't cut any corners to make that 2 minutes. But then there's a lot of steps, small steps that we took away, like address proof. If you guys are my client, you would kind of recall that we never asked for address proof. And the reason is we don't need address proof because you're taking my credit risk. Address proof was needed because back in the old days, you still need to get your bank statements via mail. Then you need address proof. And that's what we think through. And that's completely, I would say, not tech at all. It's just a process revamp. So I think that directionally, we're definitely speeding ahead and making sure Hong Kong maintaining the global financial center position.
Yeah, thank you, Roxanne. Very interesting indeed. How is the process, evolution rather than just cold hard tech, coming in. Ben, there must be quite a few insights from, the report and all that you might want to just add a bit more color to this.
Just from a technology overlay perspective, I think one of the great things that we saw with respect to the virtual banks is the permissibility from the regulatory standpoint that they can operate on a full public cloud infrastructure if they want, right? That was a big step. I think, for those of you who are working in the banking industry, the narrative for such a long period of time was keep your data on premises, right? And now we've kind of evolved to an area where we understand, provided the right cybersecurity measures are in place, operating on a public cloud or a hybrid cloud infrastructure provides huge amounts of benefits in terms of just scale and efficiency, particularly for product development rollout, right? So time to market for getting things done, just because you can borrow the system resources of the internet, is now much more powerful. The data side is also very interesting, just because, the traditional data that is collected by banks, especially when credit scoring and they open up their lending book, has been quite archaic, right? It's your income statements, your salary proof. Now the VBs are really starting to understand your digital footprint, right? And what that means about your behaviors, your patterns, your spending, your riskiness. You saw a lot of headway done by particularly the Chinese tech giants in this space when the buy now, pay later kind of peer-to-peer lending space took off in China. And you also see a lot of it in Southeast Asia, where they're really analyzing your metadata as a consumer through your telephone to understand your creditworthiness or your trustworthiness. Just an interesting point of note, people who are found to use dating apps in general are found to be less trustworthy. So if you're on Tinder and you want to take out a loan, you might want to delete it. Although they'll trace your footprint. But in any case, I think the reality is being able to look into this level of data creates immense amounts of opportunities, but it can also create a little bit of reticence or fear with customers around how are you using my information. And provided that the VBs are using it in the right way, I think this is a really interesting area of development going forward, particularly around segmenting what is a customer of one. these kind of old models about email campaign blasts or cold calling me from public bank to ask if I need a loan. No, those days are dead. So if you understand my digital footprint and habits very well, you'll be able to put a product in front of me that's very much targeted to what I need right here, right now, in real time. So, you know, that's a huge, huge step up for the VBs in terms of the potential going forward.
Yeah, I think it's fascinating that how the metadata, you know, affects the whole CX and the way in which, you know, you can sort of like look at the client's preferences and so on. There are two interesting questions from the audience. I think Roxanne touched on a little bit about what type of employees that you are looking to hire. So I don't know whether, you know, Edwin, you'd like to, you know, highlight a bit more on what kind of people Mox is looking for.
I actually, even speaking to some of the people outside Mox, but within the virtual banking industry, there's always a common theme, which is really wanting to make a difference for that banking industry in Hong Kong. And you really, really feel it, where I think people just feel like, you know, and I think it builds a little bit on Ben's point as well as Roxanne's, but it's, the HKMA have been incredibly supportive. So while the banks only kind of came to life last year, I mean, it's been something that's been in that building process in 2017. And a lot of people that joined, especially the ones that were early, was just, they really felt, you know, the current banking experience, there's a lot of room for improvement. And they just want to create something different. So it's almost that passion or that vision that you can just make something happen. And it's been tough. I mean, I know, and I'm sure Rockson would agree, like every bank that's kind of gone through that building process has had its share of challenges, and it's how you're able to almost embrace that challenges, but still just you're so focused on that goal. You just want to do it. And that, I think, is something that we really look for.
That's so true. You know, the need to want to make a difference and make an impact, you know, and to bring that differentiation to the virtual bank, you know, or to the banking offering. The other interesting question actually from the audience is about, you know, sandbox programs that the Hong Kong MA might have, or something that you might have been brewing, you know, individually. Are there some things that you can share with us, Roxanne? Rocky? Edwin?
I'll jump in first. I think the MA Sandbox program has been well set up. It's available for all banks, not simply virtual banks. And the example I brought up earlier, whereby we use Sandbox for the whole banking launch, is just an example. I don't think there's any new development, but I think one point I would like to bring up is Sandbox is not unique, and Sandbox can cross different regulatory environment. So I think just a word whereby if you want to have a platform or an environment to test out new products, because one thing we always bear in mind is we're under a regulated environment. So we want to make sure everything before we launch are completely tested and with no glitch and slippage. So Sandbox is a good place for us to do that. And it's very flexible, whereby whatever type of products you want to put in, how long, customer type is all up to us. So I mean, it's the banks or it's the AI's responsibility to make use of the Sandbox, not how MA is running the Sandbox.
Rocky, anything to add to that?
No, I would agree to that, because I think for, at least from how we see it, the traditional banks, it's the MA Sandbox is one of the more utilized sandbox in Hong Kong from a regulatory perspective. So definitely, it's free for all banks to participate in the Sandbox initiative.
Yeah, Edwin.
Well, for me, I'm mindful this might sound like an advertising plug. I genuinely encourage everyone, like, sign up to ZA, sign up to Mox, sign up to any of the virtual banks. And why I say that, honestly, it's because you're alluding to, you know, what are the secret services that we're testing in the Sandbox or whatever. And I do think this is such an incredible opportunity, in the sense that Hong Kong or HKMA have gone for 8 licensed banks, all big players, all well-funded. And everyone's going to create new innovations for people to use. I don't know if they'll all land super well, but the whole point is to be agile and lean, to listen to customers and to constantly innovate. So that's why for us initially, we really started this program on, like, our whole mindset was everything starts small, or all greatness starts small. Like that was honestly our thinking. And that's why we started with this kind of metal card thing. And the whole intention was just grow with us. Like as in, we will be new every day, or we will be new every month. We'll constantly have stuff to roll out. And that's why, to your question, it's, you know, rather than finding out like what we're testing right now, just find out for yourselves. And I do think, or at least what I see from all the virtual banks, it's a lot of these, in my mind, are micro innovations. So as in, you know, credit card's a credit card, deposit's a deposit. But you know, for example, like we wanted to change deposit a little bit differently by making the savings daily, because we saw the Apple card and you saw your cashback daily and people just liked it. You know, every day you get a little bit. Or, you know, we want to create these goal accounts because when we did our research, people felt banks are great. Like banks in Hong Kong are really, really good, but they just felt they didn't really help them do the financial planning. And they always, when we sat down with them, was they either had like a separate app to do their financial planning or expense management, or they had a separate Excel file. And we just want to build that into the app. So that's why, I don't know, I just feel so much of it is just use it yourself, test it, you get some awesome rewards along the way. I really think as a customer, there's nothing to lose. And as an industry or Hong Kong Inc., everyone benefits.
Yeah, I definitely agree with that. I think Ben and I are all users of the services, and you know, we really feel that not only is there nothing to lose, but actually you would like to be part of this journey, you know, as well. I think the next question actually, you know, would have some input from each and every one of the panelists. You know, the GBA and the Wealth Connect, what are the opportunities that this might have, and how do you see the virtual banks being, you know, competitive versus the incumbents, you know, tapping into the GBA and the Wealth Connect? Who would like to go first?
Maybe I can start to kind of set the background, because as Rockson mentioned earlier, the GBA initiative, now the formal rules, there's some rules that are out, they're still pending finalization, but we all expected the initial launch will need to involve a traditional bank, northbound or southbound. And at most SFC, like type 1 license entities, to doing the securities distribution. So the starting position now, virtual bank, based on the current environment, right now they may not be able to participate, but I think our discussion on this question would be on the assumption that virtual bank can participate. Whether it's something for the virtual banks to look out for, and whether it's something that you will try to get ready, and once it opens up, you will look to participate. I think that should be the better angle to look at it.
Yeah, Roxanne?
I'll jump in. I think GBA definitely is an area of opportunities, but then as Ben mentioned early on, it's a different jurisdiction. So there is licensing requirement, but then I think under the initiative, we might see special treatment. So that's wait and see. But then from a virtual bank point of view, from a Citibank point of view, we're getting ourselves ready for that. Getting ourselves ready because in our licensing condition, right now we're only serving Hong Kong residents in the form of Hong Kong ID holder, be it permanent or non-permanent. But that's only one of the kind of identification we're using. So I think the next logical step would be to expand your customer onboarding with different jurisdictions or different passports or different IDs. That should be the logical way to get yourself prepared for it. And secondly, the Wealth Connect is definitely one key item that we're focusing, because I insurance and investment, right? So that part I mentioned earlier, we are going through the relevant licenses with SFC. So I think my approach, or our approach, is to get ourselves ready rather than waiting for something to happen. And when it happens, we can respond as swiftly as anything we've done so far.
Yeah, absolutely. Edwin and Ben, we'd love to hear your thoughts as well.
It's okay. I'll start, and really more building on Roxanne's point. So obviously, a lot of this is certainly subject to regulatory developments, and certainly on the getting ready to ensure that your partners can help you onboard different form of identifications as a premise. I think one thing that we also think hard about, which is kind of connected to the Wealth Connect discussion, is really what's the proposition that would work, because you wouldn't go in with the same deposits or savings. And why would someone in the GBA region open a virtual bank account through Hong Kong, or a Hong Kong virtual bank account. So there's a lot of thinking around that, and what exactly could be that proposition that would work for different markets. So that's kind of how we're thinking. And obviously, why I say connected to the Wealth Connect is we think one angle that would probably be most relevant for this audience would be around wealth or investment management or stock trading.
Ben, your thoughts?
Yeah, I mean, it all goes back to licensing, but a couple of key things to note. Firstly, like it's in particular, as you start to expand into GBA region, because of the different jurisdictions, particularly around data protection and privacy, one of the key aspects will be around data transfer between Hong Kong and China, especially in relation to customer data. I don't think there is any absolute clarity around that at this point. I generally see Hong Kong has an opportunity to be an international data hub, to act as that data hub for GBA, just because it comes under different regulatory standards. But you know, if you go back to basic Chinese data law, you can't actually technically take customer identifier information out of the country and send it offshore, right? It's pretty strict data privacy rules. So that's a key area to watch. And the reality is, you know, if I look at the incumbent banks that we're having a chat to, some of them, in order to capitalize on the GBA opportunity, are thinking about alliances with local banks onshore in GBA, right, in China. What does this mean from the position of a virtual bank that doesn't have a branch and distribution network or a physical one? How will it compete, or what is its strategy to really pick up that onboarding process? And will full and completely open remote onboarding be allowed without any issues whatsoever? So, you know, if those milestones can be achieved, and then those licenses, particularly around type 1 and or potentially type 4, depending on what activity is undertaken, then yeah, big opportunity. But again, I think people have been discussing this topic for so long, but no one on this call has a clear view. And that's not to put anyone down, it includes me. We're still waiting to find out exactly what this all means and getting ready, right?
Absolutely, absolutely true. I think, you know, we're coming to the last part of the conversation, and it's sort of like, you know, the questions that I have in mind to explore with you dovetails with the audience question. Is just amazing. You know, it's about how do you know, what is the competitive edge? Because if you look at it, you know, Hong Kong is very overbanked, and you are trying to extra bank the overbanked, which means that, you know, it's quite a tall order. But, you know, the interesting thing is the incumbents, of course, are not staying put. Of course, you know, they are digitizing. I mean, they don't need to apply for a virtual bank license to make sure that they have digital offerings. Okay, so they don't need actually to have a digital bank in order to digitize some of their existing offerings and products and so on. So, and there's no entry barrier for them to do that. So what exactly, you know, how do you see as a competitive edge of virtual banks going forward? That's, you know, a really interesting thing to explore, and love to get your thoughts on that.
Sure, I'll jump in first. I think competitive edge, that's a good question. We always think about that statement, and I think the two key conclusion is one, the right people. Secondly, technology. The right people meaning, I think the earlier question of who am I hiring? There's no virtual bankers in Hong Kong 2 years ago, so we created that kind of segment, and the banking people we have, I would say, wouldn't have a very high technological background, because that's traditional bank Hong Kong. But then one key thing that at least CA Bank have adopted is leveraging on our own parents' tech DNA, whereby, I mean, I'm currently hiring around 400 people. More than 1/3 are technology, and those are mainly from mainland. So we're leveraging or importing mainland IT skill set at this stage. Ultimately, we want to develop Hong Kong with lots of IT talents, but at this stage, when we start up, we do need to leverage on our parent company's DNA. So getting the right people is the first thing. The second, technology is a big word, but then, I mean, we talk about big data and all this stuff. But I think technology, one thing, as an example from where CA is right now, we are servicing 300,000 plus customers with only 400 people. when you think about it, I mean, for a traditional bank with that customer scale, putting aside how long it takes to onboard that many clients, I think servicing that many clients would probably take more than 3 times of the size of where we are right now. So technology helps to make things faster and more efficient. Putting aside the cost savings, because I mean we are where we are, and I think the scale would only grow up with the diminishing requirement of costs as we grow bigger. I mean, with at this pace, 300,000 per year, we're hopefully likely very shortly hitting 1 million, and 1 million would be a big benchmark in Hong Kong. I don't think there's too many banks with more than 1 million users. So I think those are the 2 key items. And I think from a really comparable numbers point of view, we did launch the bank with saving goals, which is our current account saving accounts at 1%. Was quoted as a price war. I think it has kind of softened out because it's been sustainable, and it's not because we are offering it as a marketing or promotional item. We do benchmark it every day with our cost of funds and also our ability to earn interest. And the 1% is actually a function of how I can generate better interest and cost savings and give it back to our clients. Having said that, I mean, the 1% definitely we review it every day. And with the current high ball fixing, I mean, I'm highly likely need to trick it a bit, but at least we are showing the market that first, banking is very flexible, and secondly, we are offering a more market relevant, transparent interest rate, be it on the lending side or the saving side. So competitive advantage, people and technology.
For us, it's always been 3 things. I'm mindful people and technology are really important. For us, the 3 things, it's always been the customer experience. That's been something we put a lot of focus and attention on. The second one is the brand, and almost the brand persona and what you build out of it. And I'll explain a little bit more. And then third one is the partnership. So for example, why Standard Chartered decided not to do this, but instead with HKC, PCCW, as well as Trip.com. So for us, those 3 we really see as the competitive advantages. Agree with you on the point that I actually think Hong Kong retail banking market will be a case study to come, as in it will be the most interesting retail banking market in Hong Kong. Because you say like there are a lot of banks, which is kind of true. Like there are 170 banks in Hong Kong, but not that many actually does retail. Like when we counted, there were about 30 or so banks that does retail banking in Hong Kong out of the 170. And realistically, it's really the top 15. Like, so you have the big 4 banks, then you have the kind of DBS, BEA, Citi, and then you have some of the China, and then the family-owned banks. Most people, they would struggle to count retail bank number 16, because a lot of the 16 to 30, at least when we checked the list, was the banks with 1 branch. And so within this ecosystem of 15, 16 banks, you're introducing 8 really strong players into it through 8 virtual banks. And I think that's, in my mind, it's really about how you drive that competition. And I think deep in our thoughts, it really goes back. So, well, hopefully this won't offend, but the biggest bank in Hong Kong, even last year through COVID, in retail banking alone, so 1 city, 1 line of business, they made something like $6.3 billion in profit before tax, US. Obviously including their affiliate in their other bank in Hong Kong. But $6 billion, just as a bit of context, is a massive number. I mean, that's more profit than McDonald's globally, or probably more than like Nike globally. And they are able to achieve that in 1 city, in 1 line of business, with a bankable population of 4.8 million. So that's why, I mean, to Roxon's point, I mean, if any of these virtual banks can create the scale described with the right product sets and the right experience, so people just want to use it, then I think there's incredible opportunity for virtual banks in Hong Kong.
Yeah, I mean, echoing Edwin's point, the reality is though, per that report, the Hong Kong banking fee pool and retail, commercial and corporate is vast. It's like $50 billion in revenue for this market per year. It's huge. And then the top 4 banks corner between 56 to 60, low 60% of lending and deposits, right? So, and yes, there are other banks trying to digitalize. I can assure you a lot of them are garbage. If I move down the curve and I can talk to some of the names just outside of the top 4. And the conversations I'm having are, yeah, we need to kind of revisit our data strategy and look at our data because we don't trust it and we don't know what's going on. And they're really behind, right? You can't underestimate with all this legacy that is within there. I mean, we've been discussing this topic. I'm almost bored of it, like, transforming the traditional bank. What a waste of a discussion sometimes, how long this has been going on for. They've been marketing that discussion from like 2012, 13, 14, we're like 10 years later and they're still very behind the curve. Some aspects have been, put forward, but I think the digital native setup from scratch makes a difference. It really does. And how close you can get to truly understanding your customer. I mean, if the #1 bank in Hong Kong, which is HSBC, of which I am a customer, gets a call center to call me up asking if I want a loan, it is the most ridiculous experience in this present day for me to have to face off against that with my own bank, right? Of people that don't know anything about me and clearly can't delineate whether it's a product or service I need and just treat me like another a notch on a phone record, right? Getting so close to your customer and creating what I would call, and we outline it, this closed embedded ecosystem where you become part of their lifestyle, their savings, their spending, their investment, their food delivery, their shopping, whatever it is. It's a fundamentally different experience. And that kind of experience, when you have it, becomes easy, and provided that people's brains rewire in that way, which they do. I mean, we've been forced to rewire given COVID. We become more adept to these kinds of things. So outside of those specifics, really understanding the customer, particularly from a data play, I can't overemphasize this point. But the other part of it is with the Hong Kong dynamics. One of the highest savings rates in the world, which creates a massive opportunity in terms of how you can make that savings go to work. I can assure you that there's a lot of customers sitting on massive deposit balances in the retail segment that are doing nothing, and they're earning 2 cents a year, and the customers just don't know what to do. And if they want to do something, they have to transfer it to an online brokerage or whatever it might be. So it creates a chaotic experience. Or if I go to HSBC and I say I want to invest in an equity fund, they'll charge me 1.5% upfront just to buy in. So, I mean, these are the kinds of things where you kind of shake your head and say, fair enough, this is not a market that's unbanked. It's not underbanked, but it's underserved, right? It's for a long time been heavily underserved. And I think this digital first proposition is a much needed shakeup in the market. I think people are responding in kind, because otherwise you wouldn't see the traction and uptake that you've seen with these VBs. And remember, let's take that point about that savings rate, 35,000 on average. Edwin, you can correct me, Mox was around 70,000, at the end of last year. Revolut is about 3,000 Hong Kong dollars. Right? So let's put that in perspective as to the sheer asset base that you can work with and make go to work. So, I do see potential. I think the estimate we put out 5 years time, top line perspective, about 19% combined market share for the 8 VBs in Hong Kong. Because outside of the top 4, I think the rest are a bit of a joke, to be honest. I mean, in the incumbent land, not in VB land, right?
Thank you, Ben. Digital native bank versus digital nomad, bank. Rocky, would you like to close this out with a couple of perspectives? I noticed that we're running over time already.
Yeah, just quickly, one point. I think how we see it from our end, at least, is the legacy system that's really dragging back the traditional bank. It's as you may all know, it could be a nightmare trying to update even a tiny little thing in the traditional bank system. The level of approval, consideration teams, and go through local, regional, global process. It takes a lot of time, a lot of effort. So I think that's one of the key competitive advantage of virtual banks. They start off new. They basically start from scratch, and they can build what they want in this day and age. That's a clear advantage for them.
Thank you again. Clearly an exciting journey, and I think we will continue to monitor that closely, to work with all of you closely. And I want to thank each and every one of you, Roxanne, Edwin, Ben, Rocky, for being here today and spending the time. And everyone, please stay tuned for more to come from FinTech Association of Hong Kong. And on that, have a great evening.
Thanks everyone.
Bye. Bye-bye. Thanks.
Bye.